Rumors are getting louder. At first, they were cautious hints in the Japanese press, in the columns of little-known economists. Then came articles in regional analytical bulletins, citing anonymous sources in Tokyo's diplomatic circles.
The headlines sound almost unreal. Japan, a founding member of the G7 and one of America's closest allies, is suddenly being linked to the BRICS economic bloc. For years, the idea of Tokyo aligning itself with Brazil, Russia, India, China, and South Africa seemed impossible. But a shocking trade war twist has now put the question front and center. Will Japan really join BRICS? The start of a trade war. The chain of events began when Donald Trump returned to the Oval Office and reignited his signature economic weapon, tariffs. The very first target was Japan's car industry, a sector that sits at the heart of the nation's economy and identity. Brands like Toyota, Honda, and Nissan were suddenly hit with massive duties. Nearly one-third of Japan's car exports were bound for the United States, and overnight, that flow was disrupted. Trump justified the move in blunt terms. On social media, he wrote, "America must come first. Even allies can't take advantage of our generosity." In Washington, it was framed as tough love. In Tokyo, it landed as a betrayal. Members of parliament were reportedly asking each other, if even Japan isn't considered an ally, then what is left? The tariffs didn't stop with cars. Electronics, semiconductors, agriculture, and even seafood were caught in the crossfire. For Japan, which depends heavily on trade to fuel its economy, the blows were devastating. Automakers fight to hold the line. On the ground, the story quickly turned to whether Japanese automakers would pass the cost of tariffs directly onto American consumers. Reports from Nikkei Asia suggested they were already doing so, slowly passing some of the expenses through to car buyers. But Toyota, Honda, and Nissan pushed back, telling CNBC that wasn't the case. Toyota explained that when prices rose in July, it was part of their regular annual adjustment for operational costs, not a tariff response. Reuters had reported that Toyota planned to raise prices by about $270 on average, but the company insisted tariffs weren't the cause. Still, their own financial results told a different story. In the quarter ending June 2025, Toyota estimated U.S. tariffs cost them $3.03 billion, with a full-year impact projected at $9.4 billion under the new trade deal. Honda leaned on its U.S. production footprint. With more cars in the Cars.com American-Made Index Top 20 than any other brand, Honda said it could shield customers from tariff costs. Price changes for its 2026 models, the company argued, were tied to added features, not politics. Nissan emphasized its US-based plants too, saying it was using local production to offset tariffs while keeping prices steady. The company also mentioned it was carefully managing inventory to meet demand without losing competitiveness.
Multilateralism under attack, our autonomy is once again at stake. Hard-won achievements such as climate and trade regimes are under threat.
The
Brazilian government released a declaration following some discussions. It said, "The proliferation of trade restrictive actions threatens to further reduce global trade." The statement does not mention the US or its president by name, but it is clearly directed at the Trump administration. Trump shot back at the bloc on Sunday. On social media, he stated,
But despite these strategies, the export data showed clear stress. Japan's export decline. By July 2025, Japan's exports had recorded their sharpest drop in 4 years. Government data showed a 2.6% fall year-on-year, larger than the expected 2.1% decline. It marked the third straight month of contraction. Shipments to the US fell by 10.1%. Auto exports slumped 28.4% in value, while parts dropped 17.4%. Yet volume fell only 3.2%, meaning Japanese automakers were cutting prices and swallowing costs to keep cars moving. Economist Takeshi Minami of the Norinchukin Research Institute warned that this couldn't last forever. At some point, Japanese companies would be forced to raise prices for American buyers, and that could further hurt sales. At the same time, imports dropped 7.5% year-on-year, leaving Japan with a trade deficit of $795.4 million in July. The blow was softened by unexpectedly strong GDP growth in the April-June quarter, thanks to resilient exports and capital spending. Still, the message was clear. Tariffs were squeezing Japan, and the outlook was fragile. The tariff deal with Trump. After months of tension, Japan struck a deal with Washington in late July. The United States agreed to cut auto tariffs from 25% to 15%. But compared to the pre-trade war rate of 2.5%, it was still punishing. In exchange, Japan pledged a $550 billion investment package in the U.S. market. For automakers, the relief was partial at best. A 15% duty still represents an enormous strain on an industry built on slim profit margins. Toyota, Honda, and Nissan may continue to say their price hikes aren't tied to tariffs, but their financial statements reveal how deeply the costs are biting. BRICS. While Japan scrambled to deal with Washington's demands, Beijing and Moscow saw an opportunity. Chinese delegations arrived with offers of joint technology ventures, energy partnerships, and payment systems designed to bypass the dollar. By April, Bloomberg reported that Japanese, Chinese, and Russian officials had already held private meetings in Shanghai to explore what BRICS membership for Japan might look like. It's not just political talk. Trade numbers show Tokyo moving closer to BRICS economies. Exports to China jumped 14% in 6 months. Sales to India rose 21%. Shipments to Brazil increased 18%. Japanese corporations are also investing in platinum and lithium projects in South Africa. Even Russia remains in play, with Japanese firms quietly continuing energy deals despite sanctions. For BRICS, the symbolism is powerful. Japan is not just another economy. It's the world's third largest and a cornerstone of the US-led G7. If Tokyo were to even consider joining BRICS, it would mark a profound shift in global alignment. Can tariffs push BRICS together? Interestingly, Japan isn't the only one squeezed by Trump's tariffs. India also faced a 25% duty on its exports, bringing total tariffs to 50%. In response, Prime Minister Narendra Modi announced plans to visit China for the first time in over 7 years. What years of summits failed to do, tariffs may be achieving, uniting BRICS nations more tightly. With shared grievances against U.S. trade policy, the bloc suddenly looks more cohesive than ever. The numbers behind BRICS' strength. On the economic front, BRICS has been quietly outperforming the West. According to the International Monetary Fund, BRICS GDP grew 4% in 2024, compared to 3.3% globally and just 1.7% for the G7. In 2025, BRICS is projected to grow 3.4%, nearly triple the G7's 1.2%. China already dominates Brazil's trade profile, accounting for 28% of its exports and 24% of imports. India and China continue to buy Russian oil, keeping Moscow afloat despite sanctions. For Tokyo, the numbers make it clear the US is no longer its only viable trade partner. The new BRICS currency, the most ambitious project on the horizon, is a new BRICS currency meant to rival the dollar. Unlike the US currency, this one would be backed by a basket of commodities: gold, oil, rare earths, and even Bitcoin. While their gold reserves alone aren't enough, pooling assets creates a system with broader backing. For Japan, this presents a dilemma. Should it tie itself to a dollar-centric system that is increasingly politicized, or join a new financial structure that promises diversification and stability? Could Vietnam be next? BRICS expansion doesn't stop with Japan. Vietnam has also been floated as a possible candidate. Like Japan, Vietnam has been caught in US tariff crossfire and is trading more heavily with BRICS nations. The bloc is signaling that it wants to move beyond its emerging economy roots and become a true alternative global order. A new economic security framework, Amid Donald Trump's tariff war and a turbulent Indo-Pacific, India and Japan are drawing closer than ever. Prime Minister Narendra Modi will travel to Tokyo on August 29th for a 3-day visit, his first since 2023, where he will meet Japanese Prime Minister Ishiba Shigeru. The timing is crucial, with Trump imposing punishing tariffs, 50% on Indian goods after earlier 25% hikes. Both India and Japan are searching for new ways to safeguard their economies and strengthen their partnership. At the heart of Modi's Tokyo visit will be the unveiling of a fresh economic security initiative. This new framework is set to boost collaboration in semiconductors, artificial intelligence, pharmaceuticals, and critical minerals. Both leaders are also expected to revise the 2008 Joint Security Declaration, making it more concrete with steps towards stronger defense cooperation.
Exacerbating the strain on the economy. With interest rates hovering near zero, the government's ability to issue bonds has further complicated the situation, leading to inflation, currency devaluation, and an escalating debt crisis. It covers Japan and has long been a source of great worry for the country's economy. It represents more than 250% of Japan's whole GDP and includes both municipal and governmental debt. The debt-to-GDP ratio is the highest among wealthy nations worldwide. Japan owes more than twice its yearly economic production based on its debt-to-GDP ratio of 250%. This alarming figure has significant repercussions for any country. Japan's high amount of debt has sparked worries about the country's long-term economic stability. The pressure of paying off such a large debt may prevent the government from making crucial investments in sectors like infrastructure, education, and healthcare that are essential.
One of the highlights of the visit will be Japan's Shinkansen high-speed rail system. Modi is expected to view the E10 series demonstration, which will be introduced in both countries by 2030. For India, however, the priority is to complete the Ahmedabad-Mumbai bullet train project by 2027 using the earlier E5 series, especially with Gujarat elections looming that same year. On defense, the two nations recently achieved a breakthrough with Japan's Unicorn Masts technology, advanced radar systems capable of detecting stealth aircraft. Japan at a crossroads. Tokyo is now facing a choice that would have been unthinkable just a few years ago. On one side is the United States, its historic ally, but one that has just imposed tariffs that threaten its most important industries. On the other side is BRICS, a bloc offering growing markets, new partnerships, and a chance to reshape the global financial system. Toyota, Honda, and Nissan are still trying to reassure US customers that nothing has changed, that their cars remain affordable and competitive. But behind the scenes, the cost of maintaining that position is staggering. At some point, the weight of tariffs will either hit American car buyers or push Japan toward new alliances. What this means for the future. The story is bigger than just cars. It's about whether Japan continues to anchor itself to a US-led system or starts drifting toward an emerging bloc that is rapidly gaining economic weight. If Japan even entertains the idea of joining BRICS, it signals that America's strongest allies are no longer certain Washington has their back. And this raises the biggest question of all. What would it mean for the balance of global power if Tokyo truly aligned with Beijing, Moscow, and the rest of BRICS? So here's where we leave you. Japan is trying to manage the fallout of tariffs, automakers are holding the line on prices, and BRICS is waiting with open arms. The path Tokyo chooses next could reshape the global economy for decades. What do you think? Should Japan stay loyal to the US and the G7 or explore a new future with BRICS? Let us know your thoughts in the comments. This is a debate the whole world is watching.